Hello, Facebook. It's episode number 48, take 2. Today's Saturday, August 22, 2020. We just finished a 25-minute episode, or almost did, to find out that the audio's not working. So, if somebody's there and can tell me they can actually hear something, please, please, please let me know. Can you hear me? Okay. Okay, it is working. Thank you. Okay, this is the 39.6 Facebook Live Finance Show, the show that teaches you how to make your money work for you so you don't have to work for your money. Today's episode 48, walk me through a syndication deal. Thank you, everybody, for confirming it's working. Much appreciated. Today's episode is brought to you by the Medicine, Marriage, and Money podcast, coming at you in September. In about 1 month, our Facebook group, the 39.6 community, has reached 402 members. So thank you very much for all of the help in growing our group. We'll be at 500 hopefully soon enough. Our syndication sign-up list is still on, and I plan to send an email out tomorrow with the offering and for more information on that deal. So please sign up there if you have not yet, so you can get the information. Okay, so today's question, walk me through a syndication. Okay, let's pretend that you found a deal that you want to invest in. Okay, you've received an offering memorandum, an OM, as people call it. And this should be a PDF or a PowerPoint that has all of the information about the deal. Okay, it should have like what the property is, all the specs on the property. Okay, like if you're going to go buy a car, it would have all the specs. Okay, there's the Monroney window sticker, right, on a car. It basically has that for the property. Then it should have information about the location, the region, and it should have all the information about how it's being financed, the terms of the note they're planning to use, and the investment criteria, planned investment returns, the pro forma, the structure of the debt and the equity, the capital stack, which I referred to earlier in episode 40. So it should be there. I've seen some offering memorandums that are very, very, very skimpy on information. And it makes me wonder how you're selling something that's like millions of dollars and you can't put together like a quality offering memorandum. Thank you very much, Facebook user, for explaining a HELOC to your friends. Thank you. All right. So you've had the offering memorandum, you've reviewed it, and there's often a phone call, like a conference call, a webinar for people to find out more about the deal. And let's say that you're committed to investing. Okay. So usually the first step is there's usually some email form or like a Google Doc where you put in your information and put in some sort of a soft commitment. You give them your name or the entity name that you're going to be investing in. It could be a trust, an LLC. We use a triple LP. It could be a whole bunch of different things. Or it could be like a self-directed IRA. Okay, and so you'll fill out usually a generic form that has that basic information, and they will then send you the PPM, okay, the private placement memorandum. That is the document that shows that you are investing money into this entity. Okay, we'll call this entity 123 Sesame Street LLC. Okay. And you are going to put $50,000 in there, let's say, invested in that. And you'll have on that PPM, it'll say that you have invested $50,000 and purchased, let's say, 50 shares, because they could say that each share is 1,000. Okay. You can have each share be $1. It doesn't matter. But whatever they decide to do, that way your shares are accounted for, your shares of that LLC. Now, you have this document. You will sign it. It'll often be like a DocuSign. Sometimes it's a PDF and you sign it and you send it back to them and then they sign it. But it has to be signed by both parties. It's just like if you're selling a house or selling a car. There's a document that says who the seller is, who the buyer is. When you are investing in an entity like this, you have the general partners who are managing this entity. and they are selling shares to you, basically, and you're investing your money to get those shares, they are signing off that you have invested that and you have ownership in this. Okay, and that offering, that PPM rather, that private placement memorandum, has all the information about the property and how the money is going to flow for all the extra cash flow, because it'll indicate where you are on the capital stack. Okay, and that capital stack is episode 40. Okay, so if you're investing in preferred equity, and there could sometimes be multiple layers of preferred equity, it'll indicate where you are there and how those distributions will be distributed. Okay, so you know how when you invest in like publicly traded assets and you have a brokerage account at Fidelity or Vanguard or Schwab, that brokerage, they're responsible for keeping track of all the shares you own for whatever investment it is. Okay, they're your bookkeepers for that. This is not a publicly traded security, so you can't buy it through that. It's a private security, so you need a private placement memorandum, that document, and it's often a huge document. Okay, when you and the other person have both signed this, okay, you and the sponsors, and if you're married, often they want to have the spouse sign as well, even if it's in an entity, especially depending what state you live in, they may require a spouse to sign something. Okay. Once you have that document, then that is your proof, okay, of your investment. Then you send your money to them. Don't send money to the LLC prior to having that document. That document is your proof that you have ownership in the entity. Otherwise, you're just sending money to a bank account. Okay. So get that signed first. Now, once you have the money wired, okay, now, first of all, before you wire, don't just trust something you see in an email, because wire fraud is a big thing these days, especially with so many big transactions all happening completely remotely, not even in banks. You want to literally talk directly with one of the people who is running this and get that information to you in a secure fashion. Okay. Wire fraud for closings, like Barbara Corcoran had a story about this, you know, she's from Shark Tank, but it's pretty easy for people to hack into email, and they could send an email from your title agency and just change the numbers up, and you're wiring it to a new account. So this unfortunately happens. And I've heard about one story in a Facebook group of somebody investing in their first syndication, and it was a wire fraud hack. So please be very careful with how you wire money. I talk directly with the people on my cell phone who are on the other end, and I have them literally like screenshot me the bank, the routing number, account number, the person's name on it, so I know exactly where it is. Now, I have my business money at Chase now, and if they are at Chase at the other end, it's nice because it can go in as a Chase to Chase transfer, and they can look up the other person's account, and they can see all the information on that account, and I can confirm it's there, and it's a free. They don't even charge a wire process fee for the sender or the receiver if you're sending from the same bank institution, which is also nice, and it's there like immediately. But I always check with them, get direct confirmation from them before I do it, and then I tell them, hey, I'm sending the wire now. I will then take a picture of the confirmation printout, and I will send it to them immediately so they have it, and they can see when it was sent, okay, and what account it's coming from. And then I will ask them to let me know when they receive it. They should receive it the same day if it's a wire, latest tomorrow. Now, often there's a lot of different people wiring money on the same day. Okay, so just from a bookkeeping perspective, that's why I'm pretty proactive about this and make sure that they know I'm sending it, and I send them that receipt because it'll often have like, you know, the account information, so they know what account is coming from. Sometimes when they get a wire, it might just say like, you know, Chase or Bank of America or whatever, and at least they know it's coming from a Chase account or a Bank of America account, and then they can just line up every day and make sure they know who's sending them money, because you're only going to send them money once, right? And this is it. Now, after that money is there, it's going to be sitting in that bank account. You're not going to get paid anything yet. The property hasn't even been purchased yet. It can still be a month, 2 months, maybe 3 months before it closes, just because often these big projects, even just buying your own house is a 45-day process often, right? So it can easily be 2 months from when you send the money until it closes. Sometimes closings get delayed. Anybody who's bought a house knows that closing can easily be delayed. So your money can just be sitting there, not necessarily making you money yet, but it will, okay? Or at least that's the plan. So after the property closes, okay, let's pretend you were to invest in something right now and it closes in November. Now, you're not likely to get a distribution of any cash before the end of the year, but the property was purchased in this year. So in 2021, in March, you're going to get a K1, potentially earlier, but usually in March, you'll get a K1 document that is the tax document that shows the IRS what your tax liability is for your portion of the entity. If there's 100 investors and you own 1% of the entity, then you'll have 1/100th of the tax liability of the asset. It's usually a gigantic negative number, so you will take 1/100th of that negative number on your K1. Okay. When you work at a job as an employee, you get a W-2. When you own a share of a private partnership company, you will get a K1. Okay, some of you guys who are partners in a private group get a K1 from your company. Same thing as that. Okay. You will give that K1 to your accountant for your taxes that you file by April or October if you take the extension. Okay. Now, once that asset is owned, they have to go through the whole takeover process of getting the books converted. All of the rent is going to, change directions from the old owner to the new owner. And getting the book settled is a process. It's easily a whole month to get the books settled in. Okay. If you buy a property that is cash flowing on day 0, then you will probably get a distribution sooner. If you're buying a property that is a non-performing asset, they have let's say 80% occupancy, they're struggling. These types of properties can take a while to turn over and get it going in the right direction. So just the same way, like if you do a new build, if you're investing in a new property development, like we talked about in episode number 43, then you could go a couple years without actually getting any distributions at all because they're building the property, right? When you're buying something that's underperforming, it could still be a couple years before you're getting paid because it takes a long time to get the property performing. Okay. If you're buying something cash flowing on day 1, you're probably going to get paid sooner. Now, different general partners, different deals distribute capital on a different schedule. Sometimes they do it once a month. Okay. Sometimes I do it once a quarter. That's probably the most common. And I have one deal that does it every 6 months because it's a special HUD loan and they only allow distributions twice a year. But quarterly is probably the most common. That first quarter, let's say a project closes in November, the first quarter after that would be like February. You might get paid that first quarter. You might not. But by the second quarter, by May, if it's a performing asset, you'll probably get something. Okay. And then every quarter going forward, ideally, you would get some distribution after that. Every calendar year in March, you will get another K1 for the prior year. All the meantime, you should be getting your quarterly distributions. Then when the property sells, you're going to get all of your money back, your capital that you invested, and any additional capital gains that there is will have to be distributed to all of the owners based on what it said in the original PPM in terms of what the equity split is between the limited partners and the general partners. It could be like 80-20, 70-30, 65-35, whatever it is. That extra capital has to then get dispersed based on whatever the rules are based on the LLC's documents. Now, if you invest in preferred equity situation, which will be laid out in the PPM, then your cash flow during the hold will usually be more regular, you should get a better idea of what you're getting, because they will usually try to keep up with all the preferred rate of return payments throughout the entire hold until it sells. So then you have a better idea. If you're not investing as preferred equity and you just have a straight percentage with the general partners, then every quarter that amount could vary and your distributions could vary. Okay. But in general, investing in a performing asset, you will get regular distributions during the hold. And then at the end, you get your money back and gains. Now, it's not uncommon in situations like COVID for distributions to be paused. Okay. I discussed this at length last week, and that is episode number 41. So please listen to that. But remember, just because distributions are quote unquote on pause, it doesn't mean that you're losing money. They could just be holding on to cash for a while. And then when the cash situation is more comfortable in terms of future monies being expected and stable, then they may redistribute that out. Because there's two big rules about owning an asset like this. One is never foreclose, and two is never call for capital from your investors. Okay, which means you don't want to ask for more money from investors. If you gave away money out to the investors and then you're asking for it back, that just means you're not managing your balance sheet well. Okay, I've known some people who closed on an asset, and that first quarter, they wanted to make it look like, things are going great, and things were going fine. And they gave a distribution out, and people were very happy with the distribution because it was more than they expected. But then later in the year, they were thin on money because there were unexpected things that always happen. There's always something unexpected that happens that first year in a big property. You never know everything about a property, right? So often it's more prudent to minimize distributions like the first year until the end of the year, until you've owned that asset and any surprises become known. Okay, then you really have a better idea what your cash position is going to be going forward. Okay, so that is how a syndication works. Find the deal, tell them how much you want to put in, under what entity, sign the PPM documents, make sure that they sign the PPM documents, wire the money, okay? Or if they allow you to send a check, okay? Then file your taxes with the K-1 every year, collect your money. Some people send out checks, some people do direct deposit. It varies based on what groups are running it. I like things all to be direct deposited. I don't like to worry about finding mail, finding a check, signing it, depositing it, etc. I just like the money to go right into my account, and I get an alert that I had a deposit. Most groups I work with, actually every group I work with allows direct deposit. So that's how I have all of them. All right. Thank you everybody for joining. I'm glad the audio worked. I'm going to probably fire BeLive and switch over to something called Restream, which looks pretty awesome and I think is a little bit more robust. So I'm going to give it a try, maybe starting tomorrow, so that I don't have to redo any more episodes. All right. This episode is brought to you again by the Marriage, Medicine, and Money podcast, coming to you in September. We are at 402 members in the Facebook group, 39.6 community. Please, everybody, invite 0.25 of your friends, or 0.25 of a friend, and we'll get to 500. The sign up for syndications is still up. Sign up there, and I will be sending out the information on the 506C public offering tomorrow, which is open only for accredited investors, which is what makes it 506C. Okay, and I'm allowed to talk about it because it's 506C, not 506B. I think that's it. I'm going to get some rest. Thank you, Facebook user. You guys have a great night. Until tomorrow.